Topping the news at 5:30, as we told you at the start of the hour, the Dow dropped about 4%, the Nasdaq down 6%, and the S&P down close to 5%, just a day after President Trump announced sweeping tariffs. The administration's 25% tariff on all foreign vehicles and auto parts kicked in at midnight, and a 10% tariff on all imports is set to begin Saturday, with added reciprocal tariffs starting next week.
As expected, there was a major sell-off on Wall Street today, with the Dow experiencing its biggest drop since February of 2020, more than 1,600 points. So these are major losses, but what should we all be doing about it?
We have Stephen Elwell here now, the Chief Investment Officer and a partner at Level Financial Advisors, to give his insights. Stephen, interesting day for you today, I would say.
Very interesting day.
How many calls have you gotten today?
A few, but, most people are trying to take a bigger picture view, right? It's one day, and there's been other bad days before. So if you can take a wider view, then you can maybe see through to the bigger picture.
If you are seeing the news today, and people may have, there are probably all different levels or yields of concern, right? If you are majorly concerned and you are close to retirement, what is your best advice for those folks?
I think if you're close to retirement, you really should give some time and effort to reviewing your own plan, understanding that if you're about to start living off this money, maybe we better have a little bit of money in some safe things that aren't affected by the stock market, so you can wait out any potential decline and wait for it to recover.
So did I hear you right? What you were saying is you could diversify outside the stock market. Is that right?
Absolutely. In fact, the vast majority of people should probably be doing that to begin with, but retirees especially should be doing that.
All right, someone like me, not close to retirement, what should we be doing?
This is really an opportunity. Lower prices, we like them when we go anywhere else and buy things. So if you're still saving for retirement, to see a quick 5% decline for money you're going to put in your 401k anyways, to buy those stocks anyways, seems like a long-term opportunity.
What is the best way to go about doing that, particularly for people who might be seeing this and seeing the stock market, and they might look at this as the opportunity to get in, but maybe they don't know much about the stock market other than, that the bell rings at 4 o'clock every day?
Sure. Taking advantage of your company's 401k, maybe opening a traditional IRA or Roth IRA, putting that money to work in the stock market. There's a whole bunch of different ways you can do that with those type of accounts.
To be able to do those sorts of things, you say IRA, someone at home says, I don't know how to even start here. What do you suggest?
There's a lot of good information actually out there. I mean, of course, there's a lot of information on anything, but some of the really large financial firms that you might think of that you see commercials for, a lot of them have websites that are very educational without opening any accounts. So that's often a good idea. And even our own website has a lot of free information that people can look at.
What are some things that people should be paying attention to? Because if you start looking, I imagine I know the information is vast, right? And it can be very different. What are some of those details that people should be looking for? Like, oh, that's a good idea.
Yeah, generally diversification would be the first thing that people would think of. So don't have all your money in one particular investment or one particular company. But also trying to keep your costs as low as possible has been proven to be something that pays off in the long run.
In your mind, is a recession coming?
These tariffs are making it difficult to avoid a recession. The Atlanta Fed was already predicting that the first quarter was going to be negative, so we already had a bit of a slowdown from the looks of it. This might make that worse, so it seems more possible than before.
We were talking a little bit before during the break about sort of the expectations versus reality. You were saying that is possibly why the stock market performed like it did today, because the expectations they were actually under what reality was, right?
That's right. The market had really priced in maybe a 10% across the board or 20% across the board, worst case. This was 10% plus others on top of that, depending on our relationship with each different country. That was not priced into the stock market. That's why you saw such a big decline.
I know you're an investment expert per se, but people making big purchases coming up. Anything you suggest? I need a new car, I'm about to build a house, anything like that you suggest?
That could be a tough moment to do that. I mean, obviously, if you were thinking 6 months or 12 months down the road, maybe if you can afford to do that earlier, that might not be a bad idea, because price increases are very likely coming if these tariffs stay.
That's a good question, too. When it comes to the sort of broader stock market here, for folks who are just now getting in, they don't want to do what everybody did today, and that's sell off, right? I mean, if you're just getting in, you're dipping your toe in, you want to, as you said, pull back, right? Tell people what that means.
Yeah, so I think if you're just getting into the stock market and you're starting to invest for your long-term retirement future and you're younger than, say, 50 or 55 and a ways away from retirement, putting money into your retirement account now and investing for the long run, you'll likely look back on this period and say, what a great entry point that was for me.
Wow.
Yeah, good opportunity out there. The last time we went through a recession, and I'm not saying we are going to go into a recession, how did that impact Western New York, Buffalo specifically?
Yeah, so the last time we went, it's been a little while, right?
Yeah.
The real recession that we last had was COVID, which of course was so unique. It's kind of hard to really pinpoint how that affected all sorts of different places. This one may actually be different because Western New York's relationship with Canada is different than a lot of the rest of the country. So that for me actually is very concerning because I enjoy going to Canada. I have friends that enjoy coming over here. Businesses rely on that relationship. So for Western New York, yeah, it is concerning, these tariffs.
Stephen, we really appreciate you being here. I think the biggest thing we take away is at this point, don't panic, but do investigate if investment is in your future.
Spend a little bit of time reviewing your own situation.
Great. Thank you, Stephen.
What is your website for folks, too?
www.levelfa.com.
Okay. Thank you so much, Stephen.
Thanks.